Which means Kate Moody is on set. Hi, Kate.
Hi, James.
Now, you're looking at Turkey's currency, which after really going down big time, it's recovered a little bit. Historic lows on Tuesday for the Turkish currency.
Yeah, rebounding about 7% since those lows seen yesterday. But the lira has lost up to 40% of its value against the US dollar since the start of this year. President Recep Tayyip Erdogan has again been defending this week a series of controversial interest rate cuts despite double-digit inflation. Economists generally agree that higher interest rates help to stabilize inflation by encouraging consumers to save rather than spend. Earlier, I spoke to our Ankara correspondent Jasper Mortimer about what's behind the lira's fall.
Polls have been saying for months that if elections were to be held, Erdogan would lose. Now, to regain support, he's been pushing the central bank to lower interest rates in the hope that this will stimulate growth, reduce unemployment, and regain him some voters. Now, the central bank has cut interest rates by 4% since September. Now, inflation is running at 20%, and it's against all economic practice to lower interest rates when inflation is high. But Erdogan does not accept that, and he makes things worse by repeatedly stating publicly, either on television or telling the press, that he's declared war on interest rates, as he likes to say, or he will continue to lower interest rates. And the markets listen to him, and one has the impression that the markets say, my goodness, he believes in that. And minutes later, the Turkish lira falls further.
Jasper Mortimer reporting earlier. Well, China has confirmed it will join the US, UK, Japan, India, and South Korea in releasing oil from their strategic reserves. Leaders are hoping to cool high oil prices, which have contributed to a spike in inflation. But prices remained relatively stable on Wednesday, just slight dips there. US WTI trading at $78.29 per barrel. The international benchmark Brent crude just above 82. Investors and analysts are unsure about what effect that coordinated move might have in the medium to longer term. Capital Economics even warning that it could prompt OPEC and other producers to further slow their pumps. They have rejected calls from the US and others to boost their output. Well, strategic oil reserves were set up in the wake of the 1970s oil crises to ensure that energy supplies remained available in a political or financial crisis. There have been 3 coordinated releases in the past linked to geopolitical or weather issues, but never before as a result of high prices. Catherine Viette has more.
It's America's national energy safety net. The Strategic Petroleum Reserve was set up in the aftermath of the Arab oil embargo of the 1970s, which caused the price of a barrel of oil to quadruple in the course of a year. The SPR currently holds about 610 million barrels, but it can hold up to 714 million barrels. In the event of a severe energy supply interruption that threatens national security or the economy, the president can order a full drawdown, while up to 30 million barrels can be released to counter a domestic or international energy supply shortage of significant scope or duration. Despite sitting on a mountain of oil, the U.S. has only tapped its reserve a handful of times, mostly in the wake of natural disasters such as Hurricane Katrina.
The problem, though, in my view, with strategic reserves is that they have been built in the past to address supply problem. And we don't really have a supply problem right now. So we are not in the middle of a hurricane. We just have very high oil prices. And SPR were not built with the idea of saving the American consumer a few dollars.
Thanks to America's domestic shale boom, the U.S. now exports more oil than it imports. However, its reserve is no match for OPEC's resources and can only be kept up in the short term.
The number of new unemployment claims in the United States dipped sharply last week. 199,000 applications recorded across the country. That is the lowest level in 52 years. Claims have been dropping steadily since September as employers add more jobs. But there are still 4 million fewer jobs compared with February 2020. Many people have dropped out of the workforce altogether amid fear of infection or because they don't have childcare. Another sign that although the labor market is recovering from the worst of the pandemic, it has also exposed real weaknesses in the American economy. And James, this is something that's going to be felt really for months, if not years to come, the scars that have been unveiled by the pandemic.
Oh my God, tell me about it. Thanks for that, Kate.